Go ahead and open up, and we are live. Welcome, everyone, to our third episode of Trader Spotlight. Today, we have none other than FinTwist's fastest raising momentum trader, Theta Warrior here. Welcome, Theta Warrior. If you want to give a little introduction about yourself, that would be more than lovely.
Well, what's going on, GAA? Glad to be here. Thank you very much for having me on the show. Nothing more I love than talking trading and discussing charts. So excited to get into this with you today on this beautiful Sunday.
You're beautiful, man. So give me a little introduction about yourself. How did you even get into trading? You know, what's your background, if you don't mind sharing that?
Well, my dad was involved in the market pretty heavily. It was, he made a career trading and got me involved from a really young age. And basically, what I did in the beginning was, I just invested in stocks. So, I've had a portfolio for a while now. And then once I started getting more comfortable with the market, started learning about options, I started to, explore kind of into that realm a little bit more. But in the beginning, it just, started as a simple buy and hold, strategy, which I still do to this day. But as soon as I discovered options, I was hooked. I'll never forget my very first trade. It was in Applied Materials, and I think they had like a bad earnings release. The stock opened up down, and I'm thinking, from like a really inexperienced level, oh well, it opened down 5%, so it's got to bounce back, right? Not even looking at what the numbers were. So I bought some calls. I was up like $300 or something in like a couple hours, and I was like, holy cow, this is more money than I make in one day at my job at the time. So ever since then, I've been hooked and just been learning and trying to evolve as a trader myself. And after that moment, there was no looking back.
Awesome, awesome. So you originally had a little bit of a background in finances, or at least the stock market, throughout your father.
Mm-hmm.
Awesome. So when was the point you decided, okay, trading options is for me? That's the route I want to take. What was the click for you?
Well, it was really when I figured out that like this is what I could do to achieve financial freedom and and have time freedom and be able to do what I want to do with my life. And instead of working, for a boss, and making an hourly wage, I realized that this was like going to give me the potential to, really go somewhere and do what I want to do. And options is definitely, been able to provide that for me. I really also gravitate towards the risk reward. Trading stocks is great. You hold something forever, goes up 10%. That's awesome. With options, we can be up 10% in, less than a minute. So there's definitely always been a really big interest in me when it comes to options, just simply because of the beautiful reward, risk reward ratio.
Gotcha, gotcha. Now, I feel like everyone who trades on Twitter is familiar with the fact that you are a momentum and breakout type trader. Now, what was it about this type of play style, or before you even answer this question, if you want to elaborate more so into your play style with specific examples, but ultimately lead up to what was it about this play style that drawed you so heavily into it?
Well, for me, it started out, when I would look at the chart and, see like long periods of consolidation, where the stock is just trading sideways, up and down, not really having much direction. And then all of a sudden, as soon as it would break a resistance level or a support level, then you would get like a big thrust. And, I realized, I was like, wow, that's really the time when you want to be involved. All the rest of the time, you're just sitting in the trade, losing money due to theta decay. And, I started to try and look and find times in the market when that may be about to occur. So, using, of course, price action, different volatility gauges, momentum gauges, looking at all the factors, the short interest, how bad are shorts going to have to cover if, it pushes above this level. All of those things play into when a breakout might be about to occur. So, it's like Buffett says, there's no called strikes in trading. I'd rather just sit and wait and be patient and let that setup come to me. And then as that breakout is starting to happen, or just before I believe it's about to happen, that's when I get in the trade. And, honestly, like Amazon was a great example last, Tuesday when it did break out, broke that all-time high. The writing was on the wall that that breakout was going to come. And, what does it do? It rips, $150 in one day and then sideways for, 4 or 5 days and then pulls back. I would rather be getting into that trade in the beginning or even the day before and then selling into that strength, because sometimes, yes, it will continue farther, which of course that's what a lot of people were thinking was going to happen with Amazon. But more often than not, you'll see like a pullback. That's why they say wait for that retest. So, once a move has already begun, the breakout is kind of, getting to the tail end of the initial day. That's where I always look to start locking in profits and potentially, looking for a pullback and a re-entry spot.
Awesome. Now, I want to build off of something that you were starting to say. You talked about how support and resistance level breaks, the quick movement and the sudden large movement, resulting in the profits with options is what drawed you in. But you also mentioned so many other factors and indicators that you are considering before you even enter a trade. Now, a lot of new traders with these, level breakout type watch lists, they will just see the resistance or support break and then they'll go in, they'll close their app, and then they'll walk away, not monitor price action even leading up to it. Now, we saw this week there was lots of triggers that either gapped over and came back, but people mistook a pullback into the trigger as a retest when the price didn't even hold, not even seconds. Now, do you want to elaborate a little bit more on all your other indicators and how you look at price action to determine whether the breakout is an adequate entry for you or not?
Sure. And I mean, to touch on what you just said, sometimes it's difficult to know if a retest is going to hold or not. Like, sometimes you'll think it's going to bounce at the breakout level when it's pulling back and it'll come right down through. That's why, of course, stop loss is always really important. But as far as secondary indicators that I look at, like I said, price is the most important to me. I really look at volatility because I think that, volatility in the skew can give you a clue as to when, a move might be occurring, because there's much smarter people out there than me, market makers and such that are, going to be hedging and preparing for moves that they'll start to tweak the volatility as they think maybe something is coming. And even, looking at, when times of low volatility are occurring, something is not going to be in low volatility forever. So that's probably the basic, easiest way to look at it. Bollinger Bands, I think, are a really good way to find that. When you start to get that squeeze in the Bollinger Band, something is getting way too quiet for too long. A pop is going to come in one way or the other. And then, to figure out the direction in which it might go, you can look at other indicators like, moving averages, and things like that to kind of give you a clue, different momentum oscillators, as to which way it may want to go.
Gotcha. Do you mind at all if we take a look, if you pull up a screen share right now at one of your previous names that you traded earlier this week that may have demonstrated such an entry for you that gave you the cue for your go ahead?
Sure. I think you may have me disabled to share my screen, but if
Oh,
you
let
want,
me let me fix that. Sorry about that.
no problem.
All right. And then,
Okay, got it here.
yeah.
All right, can you see? We're looking at Broadcom.
Yep.
Okay. So this was actually an example of, when it didn't work, when the retest was not able to hold. This was kind of my initial, maybe something is breaking out here when it pushed above this consolidation range. And then I think this was Monday, we got like that weird news that there was going to be an acquisition and the thing plunged down and then ripped right back up, almost touching that all-time high. That, of course, was the best time to sell because, looking at what the market did, it rolled right over. Going back to what you said, if you're just buying this breakout and just closing your eyes and hoping that it's going to work out, you're going to get stuck in a bad move right here. Um, having should have having taken the stop loss at this level at the latest if you were still in it. I mean, I like to trade breakouts, but of course, the best time to get in, I think, is on a dip. I mean, even if this were to run all the way up, there's going to be little secondary pullbacks and entry spots. The last thing you want to do is buy all the way up here because, especially with weekly options, you really need price to make a new high in order for the option to even get back to even sometimes from where the initial peak was. So this is an example of one that didn't work. Stop loss took me out right here. That's the whole point of them, right? Is to protect the capital. Sometimes they're not gonna work every single time.
Right, right. So for you here, did you enter the initial breakout, or did you attempt to short the retest? What was your approach?
I bought in right here, and then, like I was saying, on the first initial thrust, I was selling into this strength. Pretty much got flat. I did buy this retest as I thought there was a high probability of a bounce. Got stopped out just below. The thing that I did wrong with this trade is that I did not consider the market, was going to be weak, even though I knew looking at the chart that there was a potential for the market to roll over. I just got caught up in the bullish momentum in this trade, and I thought it was going higher when I really should have just been more patient. And luckily, though, when you're buying dips to support, you can set your stop loss just below, and minimize your losses. If you buy in all the way up here and get stopped out down there, then obviously you're going to suffer a bigger loss. But looking at the market, all the signs were there. Let's look at the SPY first. This was kind of the day that I thought maybe, there was going to be some type of pull. The market was flashing some warning signs. You got that kind of shooting star looking candle. And then sure enough, we, have had 3 days of pulling back basically. So this is actually something I've kind of been looking at with the SPY, where we've got this nice uptrend and then, 2 peaks, a move, and then a double retest. 2 peaks, a move, and then a double retest. Are we setting up for another bounce right here into this week? Yeah, I think that's definitely a possibility. A lot of it, I think, is going to come down to everyone wanting to wait and watch and see what happens with tech earnings. If we do get a breakdown below here, I think, this may be a good level to watch, 415 or so. But as of right now, I think that the market is obviously pulling back. It's setting up for a retest. The Q's, very similar type situation. And I think that this is going to really provide us with a nice viable dip. But this, I think, is what I should have been more cognizant of and probably would have kept me out of the Broadcom trade. But in this market, I think you have to be quicker to take profits and probably use a smaller position size because it has been choppy. We kind of had some nice follow through the last couple of weeks, but it looks to me like the market's likely going to be resetting. So I'm kind of waiting to see how far down they're going to take it and potentially looking for a nice viable dip.
Gotcha. Now, I noticed from the Broadcom and your SPY chart that you're trying to find lots of confluence with your trend lines on the daily for your predictions of market direction going forward. Is that correct?
Yes, absolutely. The daily is probably the candle that I look at the most. It's what I base all my trading off of. That in the weekly. Weekly gives me like a really nice perspective into what's going on a longer time frame. But even if I'm looking, for a quick scalp day trade, I still always start with the daily candles and then zoom in, looking at the 1 hour, the 15-minute, et cetera, because price will respect these longer term trend lines more than, a shorter term little blip on a 5-minute chart. So I always like to start zoomed out and then zoom in.
Gotcha. Now, I notice you're one of the traders that often has a short list of stocks that you're watching throughout the week. Now, is your strategy of finding these stocks, and usually your picks have tremendous success. Is your strategy based off of having these stocks on watch lists on your personal broker account for a while and just waiting for the setup to come, or are you using a scanner to find these setups?
So essentially, over the years, I've built a watch list of stocks, maybe 50 to 60, mostly tech names that I, feel comfortable trading. And I've looked at their charts for a very long time. And I manually just go through them one at a time, every week, sometimes a couple times a week to look and see what, setups I like the best. And then on Sunday, I pick the top 5 or 6 or whatever that I like, and I think that are on the precipice of making a move. Because, like I said, I don't want to be in a stock, that's just trading sideways and doing nothing. I want to find the breakouts. So that's kind of what I scan for, and that's what I put out in the focus list. And the same thing with Lotto Fridays. That list is essentially just what I think is going to move on that day in particular. And it's funny, like I said, I'm mostly a tech trader, but I've noticed that some of the consumer discretionary, some of the utility names, they're really starting to rip. So Procter and Gamble was one that was on my list for Lotto Friday, and it's just funny to me because you don't think of Procter and Gamble as having like big moves, being great for options. If you had bought, I think like the close on Thursday, the 140 call was up like 400% on Friday. 400%. I mean, that's crazy. So there's a time I think to start looking for alpha in different places, and I think maybe some different sectors are showing a lot of nice potential. Procter and Gamble is one of them. Walmart is another chart that looks like it may be getting ready to go. Some of the utilities, like charting options, was looking at Next Era Energy looks really good. So I think that there's a lot of plays out there. Even if tech does want to pull back, I think that there's always more opportunities out there.
Gotcha. Now, you said you were watching these names. You built this watch list,
Yeah.
over a long period of times, and you're watching these names prior to the day's open, prior to the week's open. I'm curious, are you ever utilizing pre-market to identify potential movers that may not have had indicators of movement on the new day, the previous day? I don't know if that's a little bit of a confusing question there.
No, I understand what you're saying, and I think that that's like more geared towards like a day trading mindset, which I have started transitioning more into just because of the lack of follow through this year. But I mean, I will say this, like if something comes out, like some interesting news and there's a ton of volume, and we're expecting a big spike, yeah, I'll keep an eye on that. But in terms of like a pre-market scanner, I really don't use one at the time being. For me, it's the normal market hours is what's more important. Pre-market, yes, I look at it, but in terms of like support and resistance and breakouts, for me, it's more important to look at the candles that are actually trading during the normal hours of the day.
All right, gotcha. I think we hammered your trading style quite a bit. Now, let's transition a little bit into market psychology and build off of what we were just talking about right here. You just said that you're a tech trader, but you notice that some consumer names are picking up traction and you're shifting your trades slightly towards them, once they show continued strength. Now, some traders, when their setups aren't there, they have a tendency, of course, I'm not talking about you, but they have a tendency of scavenging for plays because their setups are not setting up, because their sector is not having money being rotated into it. Do you suggest maybe paper trading these types of feelings or staying away from them? What's your viewpoint towards this?
Yeah, I think paper trading is great. I paper traded for months and months when I was first trying to figure out how options move. I recommend it to anyone learning, even an experienced trader. Like if I'm trying out a new strategy, I'm not sure how, successful it's going to be. Yeah, I'll paper trade it. I'll see how it works. I mean, it's literally a way to get a free education, putting no money up to risk, and you can actually see, the options moving and test out your strategies. I think that paper trading is great. And, it's often a mistake to jump, from one chart to another, looking for, a trade to be in, always have to be in a trade. I really like being flat, and just having a clean slate and a clear mind, and just, watching the market and picking the timing. A big part of being a successful trader is having patience, both the patience to wait for the setup and the patience to be in the setup for the correct amount of time. Once you enter the trade, if you don't have patience to do either of those things, I mean, you're greatly diminishing your chances of success.
Right, and it's pretty shocking how you can have patience throughout 99% of the way, and then, if you fumble that entry, being a little bit eager, it could falter everything that you've been waiting for.
Exactly. Yeah. And I think, like, to anyone who gets stopped out too often, you're just not being patient enough for the right entry. I mean, that used to be my thing. I would, get too excited and get into the trade right away, get stopped out 15 minutes later, 30 minutes later, or whatever. And then the stock goes and makes the move. Think about that. If you just waited 10, 15 minutes or whatever, you would have, bought closer to the bottom, and, you would have been, in that move when it happened. You weren't necessarily wrong, just the timing was a little bit off. So if you can spot the setup, that's a huge part of this game. And if you can be patient enough to pick the right entry, that's the second half of it, I think.
Now, would you say that waiting for your setup instead of going ahead and opening a starter at, let's say, a pullback into a level that you presume that will hold instead of scaling in at your predetermined breakout level, do you have any view of that? Should you just stick to the game plan, or should you, test out the theory that the support level might hold, given that your indicators are pointing towards it?
Yeah, I think that it really depends on the position sizing. Like, for example, what you just brings Amazon to mind. This is a retest that I think everyone has been waiting to see if it was going to occur. And sure enough, we're here. So, what are we, $25 above this breakout level?
Mm-hmm.
If you're planning on building a large position, could you start scaling in here? Yeah, sure. Would it make more sense to wait for the retest if you're only going to, go in on a few calls? Maybe you don't have the opportunity to scale in. Yeah, you should probably wait. The other thing I'll say is, sometimes you get the perfect retest. Sometimes it doesn't happen. Maybe this will pivot higher from this point right here, and this will be the retest. It'll be quote unquote close enough. So in that scenario, I almost think it's better to miss, the first 10, 20% of the move or whatever, and confirm that it is indeed going to bounce, and then get in and look to scale out, wherever at the highs or wherever you're looking to get out. So, again, comes back to patience, because we all know this could easily come back down here, make it look like a false breakout, and then turn around and rip higher after they, report the earnings. So I think that when it comes to scaling, it really comes down to, like, how big of a position you're planning on building and how close it is to the support level. I wouldn't want to start building a position up here if I was waiting for the retest, but something that's this close, if you're going to buy, say 10 calls or whatever, that's your full position. Could you buy a couple here? Yeah, I don't see any problem with that.
Gotcha. Now, I feel like this is a whole new topic with market psychology. I feel like every experienced and successful trader has built themselves with the fundamentals of some, I want to say, scarring mistakes that they have made once they started trading options. Do you have any mistakes or lessons that have stuck with you throughout this entire journey that you will always remember and always remind yourself, don't make these market psychology mistakes?
Yes. Great question. So I'll first start off by saying that I think I've made just about every mistake you can make, and I've done everything wrong that you can do wrong, and I've lost money doing it. And, unfortunately, part of me thinks that that's just part of becoming a trader. When I was first starting to learn how to trade, I was, absorbing information like a sponge. I was reading every book that I could read, watching every YouTube tutorial that I could watch. And you read about all these things, cutting your losses quickly and letting your winners run. don't hope that a trade is going to come back, but for some reason, a lot of those lessons I couldn't learn until I did them myself. I made the mistake myself, even though I was warned about it by all these great traders that came before me. So yeah, I mean, I've made some stupid mistakes, like not cutting losses quickly enough. That was probably like the thing that just killed me in the beginning. Hoping that a trade is going to come back. Sometimes it does, more often it doesn't. So that's why, I always believe in using a stop loss, because you can always buy back in. There's no point in waiting and hoping. If you can just get back in when the stock reverses, I'd much rather do that. So I had to learn a lot of lessons the hard way. I think that a lot of traders do that, because they are common, mistakes that we make based on our own emotions. Fear of losing money is like a big one. So, obviously, part of being a consistent trader is controlling your emotions. So I think that over time you make those mistakes, and you see the outcome, that you start to kind of build like a shield, to protect yourself, and not make those mistakes as often, or hopefully not anymore.
Gotcha. So you believe that, ultimately you will have to, or you as in any new trader will have to run into those mistakes and, learn from failure firsthand in order to really understand what these great traders are talking about when they talk about risk management and all these psychological tips that they tweet out.
But potentially, I mean, that's what happened with me. I mean, hopefully there's some smarter people out there than I, and they can learn from my mistakes and other traders' mistakes. But for me, I had to experience it firsthand for whatever reason. Maybe I'm too hard-headed, and I thought I could do it better. But yeah, I think that, the loss of money and like the pain that you experience from that can be like the greatest teacher, because you don't want to feel that pain anymore. Like I remember some of my biggest losses. Like I remember the pain, like I can still feel it, and that is what helps me not make that mistake again. Because I think, oh man, that Nvidia trade just crushed me that one time, because I didn't take the stop. Not going to let that happen again. So for me, it was experiencing it firsthand that helped me, overcome those challenges.
Gotcha. I completely agree. Now, going back to stop losses, you mentioned that in the beginning you were getting stop lossed, and then 15 minutes later, you see the stock reverse and rip up for the remainder of the day. Now, would you say that was a problem of limited portfolio capital, or was it a problem of shorter expiration on the contracts, or was it a problem of not understanding support? What caused you to panic sell essentially?
I think it was all of the above. I mean, that's a big part of it. Not being correct in where I thought the support may be. Weekly options can go hero to zero really quickly, and you can see yourself down, 50% in 10 minutes, and think, oh my God, what have I done? I need to get out of this right now. So that all comes into play. Certainly, having the portfolio size to withstand certain drawdowns, can be a big part of it, if you can live, through those times. Also position sizing. You don't want to go too big in something, and risk, 25% of your portfolio or whatever it might be. Because even seeing yourself down that much in the red can also mess with your head, and get you out of something. But I think the biggest part of it is probably, just being impatient, not waiting for the right setup, not waiting for the right timing. Even if your stock is trading above support, the market's pulling back, your chart goes out the window, because the market rules all. So as the market's pulling back, it's going to pull your stock back too, 90% of the time. So making sure that all of those things align, I think, is what allowed me to, find success, and be better at my timing. Just patience. That's all it comes down to.
Gotcha. I noticed that you're a trader of great integrity and all. So whenever you have a stock that goes against your bias, you tweet it out. It's breaking support. Okay, that's no problem. Our previous move might have failed, but we can go ahead and play the downside. Now, Were there any instances in your trading journey where you have ruined trades or taken stops into further red because you allowed your own bias to blind you from price action?
Definitely, definitely, definitely. Especially it happened when I was trading stocks that I owned in my portfolio. Like Microsoft is one of my bigger positions. I love the company fundamentally. I think it's just a great business, and I've been long for a long time. And I used to have always a bullish bias with Microsoft. And even when, the short-term trade, the short-term chart was looking bearish, I would think, oh, well, it's got to bounce here, such a great company and all. So I buy calls and, of course, get stopped out. And it wasn't until, a few years after I started trading that I started being able to be bearish on Microsoft and, buy puts and actually rooting for it to go down in the near term. And, when it did, make money on the puts, sell those, and buy more, stock, buy more common for my position. Like that, I think is when I realized like that I made it and I was able to trade, unidirectionally, and, profit from the downside as well as the upside. But it's something that takes time, and you have to, of course, be able to separate your emotional attachment or your bias, to a particular stock. Like Restoration Hardware is another good one right here, where putting in an ascending triangle at the highs, of course, looks like maybe this is going to go higher, but sure enough, market weakness pulling it down. This is a great stock. This is a great company. What was the March low? $75. Now it's was over 700. I mean, that's crazy. So I think that short-term weakness, this is going to probably pull this lower. And, especially if the market is weak, I like to focus on my bearish setups. I always have, setups I think look bullish and setups I think look bearish. So as the market is showing me weakness, this is the type of setup that I want to focus on. And, hopefully potentially look for this to continue lower.
Gotcha. Now, I noticed some traders, even if they don't own the stock or they don't have any fundamental due diligence about the stock prior to entry, they'll still be afraid of the downside. Do you have any idea why that may be with newer traders?
You
Like
know,
playing
I think,
puts.
yeah, no, I understand. I think that, of course, everyone's different. I had one person comment on one of my posts where I was like where I was bearish on Chewy. We were all buying puts, and they were like, "Oh, I'm so glad we made money, but I feel un-American." And I kind of chuckled. Some people maybe think that it's wrong to buy a put when in reality a put is just a way to protect yourself. Us as speculators, we make money, buying puts as the stock is going down, but a put has its place in the market just like a call. So, some people maybe don't feel right about it. They feel dirty, buying puts, but I think that is, unnecessary, and that you should look at puts as a way to capitalize on a market that's moving downwards. It's as simple as that. That and or, protect your own portfolio. So puts definitely have a place in the market, and I think that you shouldn't have a bias, as far as if a stock is going to go up or down. We don't really care, right? We just want the volatility. We just want the move. So I think that you have to be prepared to trade it in either direction.
Gotcha, gotcha. So to build off of a little bit of what you were saying there, would you say that maybe people are afraid of puts simply because they don't know what the purpose of options in the bigger picture of the stock market is? They're newer investors, all they know is calls, stock goes up, puts, stock goes down. Would you say that has a contributing factor to it?
Yeah, I think you're definitely right. And I mean, Musk has kind of made, short sellers in Tesla like the enemy, so everyone hates short sellers. When, short sellers are also a necessary component of the market and actually can be a great thing because they'll often alert, bulls to potential issues, in an underlying stock. But that's a whole nother thing. I think that, yeah, you're right. I mean, buying calls and holding has worked, for the last couple of years, especially with some of the new traders coming into the market. Maybe they don't understand, that puts are a way to do it in the opposite direction. Being long a put as, a stock is falling can be much more profitable than being long a call as the stock is going up, because not only do you have the move in delta, increasing in your favor, but you also have a spike in implied volatility. So those two factors, if you're long a put, can, really skyrocket the price of the premium. So if you nail a downside move, you can make a lot of money. Then, conversely, if you're long a call and the stock is just melting up slowly. So puts are definitely not something to write off, in my opinion.
Gotcha. Completely agree. Now, with all this talk about up and down market direction, do you care to give us a little short term 3 month outlook and a little long term, maybe 2 to 3 year outlook on the market? Maybe some indexes or whatever you
Sure.
prefer.
Sure. So, like I kind of touched on earlier, I do see short-term weakness. We're talking a week or two, maybe just a few days. Um, it's really going to depend on the earnings. I think that a lot of people are going to wait and see the reaction to a lot of the tech earnings. So the Qs, I think, are probably going to drift lower in the near term, but I do believe this is going to likely be a nice viable dip. I think that, the March low, it was a quick bear market, but it was a bear market. So we've since had this, climbing the wall of worry and, ripping ever since. This is potentially a very young bull market that we're in here. So I think short term, yes, everything looks weak to me. Intermediate to long term, I think that we will continue to drift higher. So I think right now is the time to be, protecting your portfolio, or playing the downside in a couple of names, and then getting ready for that bounce. Like Nvidia, I think is one that's going to be nice, pulling back to kind of retest this breakout level. Let me zoom out and look at the weekly here. So you've kind of got like a double wedge effect here. And I expect this is going to bounce either off this white or off this yellow, which will kind of line up with their split, and, could, continue above 800, maybe 1,000, depending on how the market moves. But there's a lot of stocks, Amazon is another one that we were just looking at, that are pulling back to kind of a support level that I think may be setting up for a nice bounce. So, you know, be weary in the near term, this next week or two. But I think that there are going to be a lot of nice viable dips. Apple is another one. I've kind of been looking for this sort of move. So we kind of got up there, the 50-ish range. Again, I think this is going to be another nice viable dip. A lot of these stocks, Microsoft is another one, are just really extended, and they need some type of breather. We need something, some type of reset. So I'm looking for that reset as a viable opportunity, basically.
Gotcha. And that's going to be your outlook for the next 3 months or so.
Yeah. I think 3 months from now, bearing something crazy happening, we'll be higher than we are now. 2 weeks to 4 weeks from now, we may be lower. But yeah, I mean, overall, I'm bullish on the market, aside from some black swan event.
Gotcha. And I like what you said, that, what we've been experiencing since the March lows could be a potential of a very young a bull market. That's something a lot of traders haven't raised, and, I haven't even thought of myself. Like I always say, I have no ego. Sometimes, when I'm looking at markets at this all-time high, like a lot of new traders, my bias is going to be towards the downside, and sometimes I lose track that the downside isn't as far down as I imagine it to be, and getting this little confusion mixed up early on will make me miss continued bull runs and get hurt while the market is trending up and everyone else is doing well. So just cycles back to price action, and you're on top of it, brother, like always.
Well, thank you very much. And you're totally right. It's, cliche, but the market does like to go up over time, right? So as long as, bulls are stepping up, I think that, the market will continue to drift higher. So, there are times in the market where we see volatility to the downside, but literally every single time this has happened in history, it gets bought and then there's a new high. So, bulls over the long run are winning, and I think that they will continue to win. So yeah, besides these short-term fluctuations, I think that, you can always look for the market to drift higher over time.
Gotcha, gotcha. Now, now that we got all of that out of the way, I want to thank you first and foremost for taking your time and going ahead and sharing your trading style, your market psychology, and your outlook over the next months to years. Uh, Going a little bit further into Twitter, I noticed that you went ahead and finally launched a website where you sell your merch. You give your affiliate links. Do you want to talk a little bit about that and what you have in plan for it? Go ahead and give a little
Yeah,
promotion.
absolutely. Well, thank you for that, and congrats to all your success as well. You have a great service that you do,
Thanks,
and
sir.
thank you for allowing me to be a member of it. And I got a lot of respect for you as a trader as well. You definitely know what you're doing. The website I launched, mainly because I wanted to be able to provide people in a resource for education and learning about options and how I trade. And I created the merch as well as because I thought it would be a fun way for everyone to partake in the Theta Warrior, mindset. And because I believe that all traders really at the end of the day have to be Theta Warriors. Whether you're long premium or short premium, Theta has a huge effect on our positions. So, we all are Theta Warriors, right? So, thank you. I mean, I've gotten, a lot of kind comments about the website, and it seems to be received very well. And I'm very happy with the way it's turning out. And I plan on continuing to build to the education tab because I think that everyone has a right to learn and that wants to learn. And I'd like to be able to share my knowledge and my experiences and how I trade, and try and help other traders, be successful as well. I love to trade. I love to make money. I love to be involved in the stock market. But if I can help other people do the same, it's just the greatest feeling. Like when someone shares their gains, based on a chart that I posted, on Twitter, like I love that. Like that just makes me so happy, seeing other people be successful. So it's really been a lot of fun. And I love, the following and the community and everyone that participates and is a member of it. And let's keep it all going.
Of course, brother. Of course. Again, congratulations on the support that you're getting through your website. I'm sure you're gonna continue to gain much, much more support. Like I said earlier, you are a man full of integrity on Twitter. The people respect you for a reason, and you have a large following for a reason. You know what you're doing. You have no ego, and you deserve all the success, brother. Thank you again for this interview.
Thank you so much. That's a huge compliment. There's nothing but mutual respect here, GAA. You are the man, like I said, a great trader, and I continue to learn from you. And thank you so much for having me on this interview. And let's do another one sometime.
Of course, brother. Looking forward to it.
All right. Good luck this week.
You too, brother. You too. And we are.